All right, good morning, guys, and happy hump day. This is Taylor getting things started for September the 14th. Let's do a quick sound check. All right, good to go. Good morning, Lorna. Good morning, Andrew. Good morning, Mirza. Good to see you guys. I was on the road yesterday. Looks like I missed a little bit of it there. But all right, guys, we'll jump in. Shall not be a dull couple of days ahead. And I've got a busy day, too. I got to run some errands. I got a busted up phone I got to fix. But all right, guys. So obviously, pretty big flush there yesterday, post CPI. So here's the first observation. Remember, I think it was last week. We kind of talked about the dynamic of getting that negative moving average cross on the daily chart, where the 21 EMA ends up under the 50, getting that and the big three sell signals with the red arrow. And my thinking is you get that combination on your daily chart, it becomes a much easier short. So, of course, with yesterday's flush on the QQQ for the futures and the actual QQQ, the cash product, there's a combination, guys. We got the 21 EMA crossing under the 50, and we've got the big three sell signals. So pretty much from here, I would look for, pretty much another leg to the downside. One that I think would take us back down towards these recent lows. And I do think eventually a little bit lower. Now, granted, we could rally. The market could kind of fix all these problems. I kind of doubt it at this point. I could be wrong. Yesterday felt like a little bit of a kill shot. You trap the shorts, you squeeze the shorts, and certainly along the way we're making some pretty good progress. 30-minute charts go bullish, the hourly charts go bullish. You're back above your daily 50, you're back above your daily 21. So in the short term, it all looks a little bit promising. Of course, that all gets thrown out the window yesterday. So there's the first observation. What I think is the ultimate combo for a short: negative moving average cross on the daily chart and the big three sell signals. You got that on the QQQ. And the same thing here for the cash product. Negative cross yesterday. Now for the S&Ps, for the spiders here, on the futures, as of today, we are getting that negative cross, but we are still waiting on the big three sell signal. And then on the cash product, I'd imagine we probably get pretty close to getting that negative cross today. So this is a pretty good example, I think, of, now here's the thing, guys. We've got to have the same mindset to the downside. We're in a, let's call it a spastic market. So in a bit of a spastic market, these big flushes to the downside, they happen really quick. But then the dynamic is pretty much you trap the shorts. Then we get this crazy short squeeze. All right, so just as fast as we roll over, we get that big rip towards the upside. So like on an intraday basis, a lot of this crazy strength and then crazy weakness, it's not really sustainable. So I do think it's a good example here of, pretty much don't chase it, right? Remember what we talked about last week, wait for your first back test. They trap the shorts, they squeeze the shorts. Now we find ourselves a good 2 to 3 to maybe 4 average true range moves above the hourly 21. You got to expect your first back test at some point. And of course, in this example, the back test failed in a pretty big fashion. So as far as that goes, guys, I think pretty straightforward. Back under the daily 21, back under the 50, and we're pretty much knocking on the door here for that combination. Big three sell signals and that negative moving average cross. So for now, the QQQ's got that combo. The S&Ps are pretty close, and the IWM here, we're getting pretty close as well. So bigger picture, I think we trade lower from here. Right now, shorter term, kind of the same dynamic now to the downside. You trap the bulls up here, you get this big gap down, get that crazy flush yesterday. Even if we trade lower from here, which I think we do, I think there's a pretty good chance from here we could head back down towards those June lows. As we go from point A to point B, chances are, guys, at some point you're going to get a bit of a bounce, right? In the short term, this kind of, oversold action on your lower time frame is not sustainable. So not to say it happens today, not to say it happens this week, but I do think in terms of, hey, can we get short here? Based on the structure, absolutely. But then I do think based on the fact we're a little bit oversold on the lower time frames, we might be better served to wait for a bounce, then look to get short. So that is pretty much the game plan from here. Might require a little bit of patience, and again, I could be wrong, guys. We'll have to find out. But to give back all that progress in one single candle, to me, just further confirmation, the path of least resistance is certainly to the downside. And then I've got to feel a little bit stronger about that if we get that bearish combo on the daily chart. 21 under the 50, big 3 sell signals. So we'll see what's up from here, but that's kind of the thinking. Next couple of weeks here, this could potentially all kind of start to unwind like that. If we check out the dollar here, take these notes for future reference. Because at no point over the last 3 to 4 days did the dollar look bearish. And that's really important, right? Because as long as the dollar is bullish, or a better way to word it, as long as the path of least resistance for the dollar is to the upside, as long as that's the case, you've got to look at these bounces in the market. It's kind of nothing more than your bear market bounce. It's just a short squeeze. Kind of tough to think the market's going to actually get a sustainable rally going if the dollar continues to look so bullish. Right? That's the correlation. I think an important note here, granted that 2 to 3 day pullback in the dollar certainly makes for a pretty good bounce in the market. Right? We just saw that dollar pulls back 2, 3, 4 days. Your S&Ps are popping, your QQQ's popping. It's a short-term window of opportunity. But the major thing here, guys, is the dollar never broke down. Yeah, you broke your 21 EMA, but you held your 50, you bounced off of it. You kept on printing that big 3 buy signal there on the daily chart. It maintained its bullish trend structure and momentum. That's a problem for the overall market. If we're going to rally for 4, 5, 6 weeks, you basically want to see the dollar tap out. Break the 50, lose all the buy signals. We're not there just yet. So that's still super bullish. Not good for the equity bulls. And then if we flip over to HYG, and of course you can see the correlation there as well. 2, 3, 4 days of a little bit upside for HYG. Gave you a good 2, 3, 4 days of strength in the equities market. But the major thing here is HYG never really fixed all that bearish structure. You got a big flush, got a little bit oversold, and you got your oversold bounce back towards resistance. And right back down we go. So the things that have been a problem for the S&Ps and the Qs over the last handful of weeks here, they're still a problem. If HYG was trading above the daily 50 with buy signals, and then the dollar over here is trading under the 50, all right, guys, well, at that point, maybe the market's actually got a pretty good shot here at a little bit of short-term trend. But as long as the structure here is overall bullish, and then the structure over for HYG is overall bearish, you got to look at these bounces as shorting opportunities. Now, of course, in hindsight, I certainly wish I shorted everything on Monday because that would have made for a great day yesterday. But I will wait for the next bounce. So bigger picture from here, guys, I think we trade lower. I think ultimately much lower. But as we play these ebbs and flows on a daily basis, always be a little bit careful buying calls up here at 3-4 ATR above the hourly 21. And then also be a little bit careful buying puts when we're -3, -4 under the hourly 21. So that is how I'm seeing the bigger picture. So we still got the short in the S&Ps. So in the options room and the mastery, we've got the October 4100 call credit spread. And the nice thing about a call credit spread is, definitely makes sitting through a little bit of that bounce a heck of a lot easier. Where all we really need come October is for the S&Ps to be under 4100. So you take a little bit of heat in the short term, but that trade's in good shape. And then as far as a few bullish ideas, and remember, guys, we're playing the probabilities game. So kind of like by default, if it looks like the path of least resistance for the S&P and the QQQ is to the downside, probability suggests the path of least resistance for most things in the market is also going to be to the downside. So keep that in mind. But as far as a few bullish opportunities, I think for now you kind of narrow that watch list down to the solar stocks and the energy stocks. But I don't think you blindly jump in. So I wouldn't look at anything right now with the mindset, this can rally against the market. I think EMPH is a good example. So we've got some called debit spreads over here right now. Perfect setup. Daily squeeze, you got some buy signals. But I wouldn't trade that in a fashion where, you just have this assumption you're so good at picking stocks that it doesn't matter what the overall market is doing. I'm going to be very cautious here with the understanding if we limit down tomorrow, and the S&Ps and the Qs are down 5-6%, okay, maybe EMPH holds up. And you definitely won't hear me complain, but chances are it might get caught up in the crossfire, so to say. So be responsible with your bullish trades here. But as far as EMPH, guys, I'm still liking this one for now. So the solar sector, TAN, and we got to take into consideration, the market got whacked yesterday, like really big. Q's down 5+%. That's some really nasty stuff. So not as if TAN exploded yesterday, but it does a pretty good job there of, holding structure at that daily 21 inside that squeeze. So I think for now, one to keep an eye on. And then if you flip through some of the names in that sector, they're all pretty solid. So we've got EMPH. And we're looking for a push towards 335, 340. And we got an exit under the daily 21. You got SPWR. Frankly, I'd like to buy it a little bit lower. A little closer to the daily 21. But that's a good setup. You've got RUN. You've got First Solar. So a couple of good names there over in the solar sector. We're rocking with EMPH for now. And then as far as energy goes, and like I said, this could be dicey. So I think you want to be really picky about what you're getting long right now. But as far as energy goes, just for some comparison, it obviously looks a lot better than big tech. It looks a lot better than semiconductors. I'd argue it looks better than the financials. It looks better than the industrials, consumer discretionary, better than healthcare, and it looks better than XLP. Doesn't mean energy has to work just because it looks better. The point being is a little bit of structure here. So pretty much, guys, the big question is, does that daily squeeze fire to the upside or the downside? That is the big question. So if we check out a few names over here in energy, None of them screaming like, you have to buy calls right now. But I think a good enough structure to keep an eye on. So for Exxon here, they're all pretty similar. Daily squeeze, no buy signals. So one of those things where it's neutral. Yeah, maybe it heats up and it fires long. Could definitely break down and fire short. But what makes it attractive for now is that while the market is getting, pummeled yesterday, it doesn't look anything like XLK. Holds support, holds the structure. I think for that reason alone, given the context of the overall market, deserves a spot on the watch list. I think you put cash to work on that idea when and if things can heat up a little bit more, which for me pretty much means, do we start to get the big three buy signals? So notice up here how all the labels are yellow. She neutral. She a little bit quiet. Waiting on the pretty colors, right? ExxonMobil's neutral. Chevron is neutral. Evan. Yeah, no buy signals just yet. EOG. EOG's got an hourly buy signal. So I don't think it's something you jump into head first here. But for those of you in the mastery, we will keep an eye on it. Imagine later today, tomorrow, Friday, there's XLE, ExxonMobil, EOG on top of that daily 21 with a bunch of buy signals. At that point, it becomes the go-to trade. But that is about it, guys. Keeping things nice and simple here. Quick look at the futures. Yeah, we're pretty quiet this morning. So the game plan for today, tomorrow, Friday, be patient. Avoid the temptation of trying to get short down here, which, mind you, might work really well. My preference is let's wait for a little bit of a bounce. And assuming that bounce doesn't fix all the problems, look to get some November, December expiration shorts going into that bounce. That is the game plan, guys. So for those of you in the mastery, as a reminder, we'll be live today at 10:30 a.m. Central, and we'll look for a few trades here. But while I got you guys, we've got a few minutes. Let's go through a couple of scans together. Let's make sure we're checking all our bases. And realistically, I'm going to scan for bullish trades because the short side is basically, just short the S&P or the QQQ. All right, let me crank up a few different scans. And hopefully that makes sense. If you want to get short, I think you just get short the S&Ps or the Qs. Covers all the bases. So what I'm going to look for here is a couple of the bullish gems. See if we got anything looking good to the upside. All right, so what do we got? We got T-Mobile. If I'm going to get long, the basic combination is ideally a daily squeeze. But if I'm going to take a bullish trade, we have to be trading above that 21 EMA. And ideally, we've got a handful of green labels up here on the big three indicator. Because then that tells us, the squeeze tells us we're building up energy for the next move. The fact that we're above the 21 EMA with buy signals, that just tells us the probability suggests pretty good chance that squeeze fires to the upside. So, of course, T-Mobile after yesterday's spanking is a bit of the opposite. Under the 21 with sell signals. No bueno. John Deere. Not good enough. You got Cigna. Not good enough. Southern Company. It's a nice daily chart. Yeah, one to keep an eye on. Not bad. But look at your lower time frames. They're all They're all missing the good stuff. We've got AEP. Yeah, it's okay. We've got MCK. No bueno. ADM. CTVA. Kroger. Not going to be easy to find a bullish daily chart right now, outside of the few that we covered. Las Vegas Sands, no buy signals. Diamondback Energy, no buy signals. You've got Yum. It's not too bad. I think I like my picks for now. Short the bounces in the S&P QQQ. And so long as EMPH is above the daily 21 EMA, I like that for a breakout at some point. So that's what I got, guys. If you got any questions, any charts you want to cover, throw them on at me. And we got a good 10 minutes or so before I got to jump into the gold room. Go take those animals in the gold room through the open. Austin, what you got? JKS. It's kind of lagging behind here for a solar stock. Yeah, for a bullish trade, I think you want to see a little bit of cleanup here. The 21 is under the 50. So we have the negative moving average cross. We closed yesterday. Yeah, we're above the 21. But we don't have any buy signals just yet. It's a work in progress. It's trying to get there. Of course, the 50 is probably a pretty tough spot to break through initially. But I do think if you can break through the 50, at that point, you probably got some lower time frame buy signals. Then you got a lot to like. Oxy. It's interesting. Usually Oxy is the leadership. Now it does hold up here at the 50, which obviously you want to see it hold up at the 50. But there's a lot missing here, right? Because if I'm going to buy calls or I'm going to do a put credit spread in Oxy, the goal is that 2 or 3, maybe 4 days later, I'm catching a push like that, like over and over and over and over again. So a few differences between back there and where we are right now. The first difference, of course, is back here, you're above your launching pad, right? You're above that 21 EMA. And this time around, we're under the 21. The other difference is back here. The structure of your lower time frames fully supported a move to the upside. So look at the hourly chart here to the right. Right now, the hourly chart has no buy signals. Negative moving average cross back here. In comparison, there's the hourly chart. And this goes for all the lower time frames. Your 30, your 15-minute, etc. The daily chart above the 21 EMA sets the stage. That kind of structure to your lower time frames, big 3 buy signals, moving average cross, that triggers the move. So the stage is set. Then everything under the surface basically says it's showtime. Right now, for that huge push towards 2 to 3 ATR, the stage is not quite set on your daily chart or your lower time frames. So from my perspective, I kind of wait until Oxy shapes up a bit more. And then in the meantime, here's Exxon above the 21, positive cross on the hourly. There's the FANG above the 21, the hourly buy signal. To me, I think important differences. So I would wait for that bad boy to clean up a little bit. Yeah, Andrew, I think absolutely. I'll read your question out loud. Do I think there's a reasonable case for an ultra short term? Okay, there, I misread your question. Ultra short term call credit spread. Good question, Andrew. I mean, we're in an interesting spot right now. We're at a really interesting spot. And as I say these things, of course, we all know the reality. The market's going to do whatever it pleases. But we're kind of at the spot right now where it's like, all right, we're probably either going to just wave goodbye to support at 390 and totally start to dump, or because we're pretty oversold here on the hourly chart, maybe we do get one more bounce. So as far as putting on that call credit spread for Friday, I think the ideal outcome today, just in terms of risk versus reward, would be a little bit of a bounce. Think of the dynamic on the options chain. And it's been a pretty violent one. But just think of the call contracts that you might want to sell today. So for conversation's sake, Andrew, you want to sell the 400 call credit spread for Friday's expiration. Think of the life of those 400 strike calls over the last 5 or 6 days. First, those calls get pushed down to basically zero. They get pummeled into the ground. Then those calls explode in a ridiculous fashion on this huge rip. And then those calls get absolutely pummeled yesterday. So in terms of working a good risk reward on that short, I think the ideal outcome for today is we get a little bit of a bounce. And then, Andrew, of course, what that does for you is it makes those calls a little bit more plump, a little bit more premium for the push-in. So just better risk reward as far as the entry, but also better risk reward as far as you can actually sell those calls and they got a little bit more life to them. So I would say if you can get a bounce towards, then you got to anchor to something. Could you look to sell that call credit spread on a bounce back to the hourly 21? Yeah. Of course, I'm not sure if we're going to rally $7. So maybe you anchor to the 30-minute 21. Maybe you anchor to the 15-minute 21. But that's why I say wait for a bounce. Even the 15-minute 21 is a good $5 or $6 above yesterday's close. So I think ideally, Andrew, you get a little bounce, then you try to sell some calls. Oh yeah, you're looking for QQQ. Same thing. And I would think it could work pretty well. But all right, guys, I got a busy day ahead here. What time is it? I got to try to call Verizon ahead of time. See if they can't make your pal an appointment. But guys, I will let you loose here. For those of you in the options room, I'll see all of you in a few minutes here. We will tango at the open. And then for those of you in the mastery, we'll be live today, tomorrow, and Friday at 10:30 a.m. Central. Getting a few extra sessions in this week before the big wedding next week. But I appreciate you guys. I hope you have a great day. Hope you found the analysis helpful, and I'll talk to you all soon. Adios.